Welcome back to our discussion on how to invest in biotechnology. Nigel de Gruyter returns as our biotech investment expert. So Nigel, you've been listening to what these gentlemen on the panel have to say. Any questions you have?
Sure, I have a few questions. Perhaps the first one I'll address to Anthony and Tony. You're both working in neuroscience, and we know that both diseases, Parkinson's and Alzheimer's, is the result of the degeneration of neurons, losing brain material. Now, we know that there's academics working on replacing that brain material. How long do you think it's going to be before we see some of these cell therapy techniques run into your markets, where you'll start to see your markets disappear in favor of something that's actually a cure as opposed to making the patient more comfortable?
I might launch in.
Yes.
Nigel, that's a very good question, and certainly one that conjures up a lot of debate on either side of the equation. We all know that there's a lot of investment, and rightfully so, in genetic therapy and cell therapy towards disease modification, which is the holy grail. My own opinion is not cynical, but based on what I've experienced in my career, and even more recently what Geron announced, which was that they were backing out of cell therapy because it's just too difficult in the short run and will require a long-run solution with a lot more scientific investigation. So my presumption, and in fact the premise of Synapsys, is that disease modification via genetic or cell therapy is at least 15 to 25 years away.
I would agree with that it is far away in terms of turning on development where you can turn on neurons and synapses and therefore improve cognition and so forth. However, the field's gone a long way into understanding when to treat these patients, when to start treatment, when to identify whether you're going to develop Alzheimer's. For example, in the case of Alzheimer's, the initial therapies went to mild to moderate patients, which is far along because even prior to you having Alzheimer's or diagnosed as Alzheimer's, you have what's called early Alzheimer's, which are symptoms, or even earlier than that, where you have biological markers indicating that you're going to develop the disease. We're now at a stage where we can now get patients involved in these trials that are much earlier. And if the idea here, and this is consensus with opinion leaders, that if you treat them earlier, you have a much better probability of success. If you go at the point when they've got very few neurons, very few synapses, and a lot of inflammation in the brain and other pathologies that are unrelated to what initiates the disease, it's much harder to treat. So even in cases where you can try and treat with cell therapies, I think it's a very difficult approach.
Shamiz?
Well, it's all about risk reward. The technologies that we have here with Synapsys and Transition Therapeutics are new chemical entities that they're developing, and there's some big reward at the end if these drugs actually work. However, Intellia Pharmaceutics is looking at reformulating pre-existing drugs or emulating drugs that are already out there, but making them cheaper for the consumer. So different risk-reward scenarios I mentioned earlier.
Now, on that, you're going after essentially generic drugs, so anybody can produce these. What makes your drugs a better choice for a payer than any of the other generics that are being developed?
Great question. There are a lot of generic players out there, and I know we would know one of Canada's greatest generic companies, Apotex, and there's Mylan and Teva and so on. They're all about, at least at this stage, immediate release generic drugs. We're not involved in immediate release. We're involved in the harder to formulate drugs. You know the once-a-day pills that you go after? You know, a company comes out with, oh, you take this drug, you take it 3 times a day. And then 10 years later, they come out, oh, now we have a 1-a-day pill. That's what we go after, the 1-a-day pill, because they're a lot more difficult to formulate, and not many of the generic companies are able to emulate those types of drugs.
And mind you, I have to say this is quite a complex field. So for those investing, the average investor, what's the process steps they should take to inform themselves better before investing their money into this?
Andra, I think as Shamiz indicated, it is a question of risk-reward.
Right.
And there is, you can look at drug development, and as Shamiz indicated as well, you have people that create new drugs. They have to prove that the new drugs are safe and that they actually work. They actually do what is expected of them. That takes quite a long time and requires a substantial amount of money.
Okay.
But if successful, they actually garner a substantial return on that investment and patience. Medical devices are not as long a prospect and not as significant an investment. And as Shamiz indicated, from IntelliPharmaceutics' perspective, as their reformulations of generic drugs, it's a lower hanging fruit, as we say. And maybe just to correct a comment you made, Shamiz, Synapsys actually has taken on an approved drug that is only available as an injection, and we've reformulated it. So we met with the FDA, and they confirmed to us that we are going to follow a 505(b)(2) without making it complex for investors watching this program. What it means is a very short timeline to prove that we actually deliver the drug the same as the injection, but everything else remains constant. Everyone knows that what the drug does and how it reacts in the body. So it's a short timeline for us as well.
I see. And speaking of risk, Nigel, I just want to ask you, how risky is it for an investor to invest in a biotech company at an early stage?
Well, at an early stage, biotech companies do tend to be very high risk. It tends to be an all or nothing type of bet. However, in this case, we have some companies that are a little bit different. For instance, Synapsys is taking an approved drug, a drug that we know that works, and they're reformulating it. So the risk is substantially lower compared to developing a brand new drug. Shamiz, you're doing the same sort of thing. Tony, you're in a slightly higher risk category. You're working with some new chemical entities.
Yeah, it's a risk to reward. And if you're working a new chemical entity in a large indication, your reward is amazing. And you have to look at that. I think in investing in biotech has become very specialized over the last 10 years, where people have a better understanding what's the likelihood of success. Not all technologies are equal in making their way through the approval process, or getting it partnered sufficiently to acquire the cash necessary to develop. And I think people understand now more when to invest in these companies. When is there a likelihood that this product is going to move to the next stage of development? What is the data that they're getting, and how relevant is the data to make it all the way? So I think when investing in biotech, you really have to look deeply at that information and understand it, and then make your investment. And you have to really, in this case, pick winners. Not all biotech companies are equal.
Well, speaking of winners, who would you say has been a big winner recently?
Here in Canada, one company, for example, that has a kinase inhibitor. The way you is YM Biosciences, for example, where it's a good example of how people invest in biotech. There was good data for the particular target that they are looking at by another company. As soon as that happens, then the investors start looking who else in that field has a similar compound.
Right.
And so right away you start moving. And that's always a good way of following investments, is actually following success. Where success has been and who else might lead in that direction. And that's always a good example. And there are many ways to get there, but that's just one example that over the last year.
Yeah, the question is a great one, because risk reward, we've talked about that, and it's interesting that Nigel and myself are both ex-biotech analysts here on Bay Street, and that's what we were paid to do, is assess that risk in those companies and advise institutional clients as to which company they should be putting their money in. But not only at a period in time, over time, or which company to take your money out of because the profit has been realized at least for the next 6 months, and put it into the next company. So it's not straightforward. It's actually very complicated. But the last thing I'll leave you with is thinking just in terms of your regular SWOT analysis. Business 101, strengths, weaknesses, opportunities, threats. Each of our companies has that, and that's how you should really assess it.
Perfect strategy and advice. And Anthony, you're edging back there. Any last words?
Very briefly, I would say that certainly having a knowledge of the disease areas, unfortunately Parkinson's, for example, many people know someone who has had Parkinson's, so they'll do research on it, give them a sense of what is going on in that disease area. And the other is looking for real inflection points where something is going to happen and provide value.
Well, I want to thank our guests for joining us today. Thank you, Nigel, and thank you, panel members. And that's our show. So you've heard what they have to say. Now the rest is up to you. To learn more about each of the companies profiled today, visit their websites, or you can speak with your certified financial advisor and get all the facts before you invest. And then join us next week when we'll introduce you to 3 more publicly traded companies who might just be the next biggest winner. Until then, I'm Andra Anescu. Good night.